Hello traders, Gary Wagner here. Just about 11:30 in Honolulu, 5:30 in New York. It is Tuesday, June 11th, 2019, and this is the Daily Report for Gold and Silver. Although gold has moved up fractionally, a very, very modest move on the day, what is most impressive is the fact that it did make an extreme low during the trading session today and traded well back above that, actually closing very near its open. We'll look at that as we pull up our first chart. Silver, platinum, and palladium all also performed, with palladium scoring over a full percent gain. It seems the fact that the alleviation of the tension from Mexico and the United States and the fact that tariffs did not go into place yesterday was somewhat bullish for U.S. equities. They closed in essence unchanged. Not that much so for the precious metals markets, but I do think that both of those markets are waiting on further information that will come from the Federal Reserve in regards to an interest rate cut. With that in mind, let's take a look at our price board. Traders, as I said, moderate gains in gold, currently up $1.40 at $13.3070. Of course, we pulled profits on Sunday at $13.38, so about $7 above the current pricing. High today, $13.3380, so we're closer to the high than the low, which came in at $13.2360. It's that low that we will definitely touch upon when we look at some charts. Silver took a nice gain of almost 0.9%, still below $15 at $14.72.5. Platinum gained about 1.17% at $8.14, and palladium gained only 0.17%, a $2.30 gain at $13.8910. So traders, I do want to talk about the most recent move that we saw today, a moderate move closing well off of the lows this morning, but without any real substantial gains. Up a couple of dollars. We are in after market trading now, $13.3070, down 50 cents. Now, when we look at where this low came in, and that is roughly at $13.25, and we draw a line across it, we do see a minor price point right here in which it seemed to act as a supportive area, and it's equal to this particular price point here. However, it makes more sense to me that unless there's a major fundamental change in what we are looking at, that 1320 is a number I think gold can go to before we initiate our next long position. However, traders, I can go back historically, and I really need to go back for quite some time, back into March, to find an appropriate historical reference to this price point. This is a daily chart. It is highly compressed. We have this low that came in right here today. Our horizontal line, though, if we follow it down, we can see that there is one point in which we match it with a high, and that occurred on March 25th. So while there is some technical data that could support this area as a solid level for support, I still believe, unless we get some sort of a V and a bounce, that this market will probably drift lower, and I would look to enter, as I said, 1320 at the best price possible. I believe might be 1310. That is the 0.5% retracement, and this is the 0.38% retracement. When we consider those numbers and where the market has been and where it is going, I think patience is really what we want to excel in to enter this next trade at the best possible entry price. And traders, the other type of chart I'd like to look at today, also a daily Japanese chart, but this is a Heikin Ashi, or simply called a Japanese average chart. We can see this low here. It's not so important. What I'm really looking at is current strength of trend, because as we've talked about over the last couple of weeks, if in fact not over the last couple of years, when you have a strong uptrend like we got here, there's two things that kind of jump out at you. The first is that there's an absence of lower wicks, meaning that at no time during the trading session did market prices go at or below the midpoint of the prior candle. That's what this open is fixed off of. So we had that solid succession up. Then we had the pivotal candle a few days ago. It goes from green to red, from medium-sized body to small body, and that is this here. That was followed yesterday by a pretty sizable move down and an absence of an upper wick. That's what we're kind of looking at right here. However, today's move was nominal. It's a very, very small bodied move. It is a red candle. So what that says to me is there still the potential for the downtrend to continue? The answer is obviously yes. Is there potential for this to be a very strong downdraft, so to speak? And that answer would have to be no, because my sense is that it is more logical that the market will trade to 1320 on a technical basis, a number that makes sense, unless there's an extreme fundamental event that pushes the market one way or the other. That being said, my recommendation is to maintain our current neutral stance, to look for a proper entry point. We're still looking at the long side. To negate the long side, we would have to see a pretty substantial correction, because we're only looking at the last leg of this rally. When we look at the fact that we're talking about 1268 up to 1352, we would need to see at least a 0.50% retracement, but more likely a 0.618% retracement. A break below there on a closing basis, well, that could signal a sell. But I do believe we are headed to higher ground, and that this current correction will be short and shallow. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.